Well, welcome to this latest webinar in our series. In this session on the future of the crypto economy, we're going to be sharing some of the key findings from the study we've been running on how people are adopting the crypto and looking at crypto, both from an individual perspective and from a corporate perspective. We'll only be sharing some of the findings today because the main report will be coming out next month. So we just wanted to give a sneak peek as to some of the ideas that are in there. And I'll be sharing the findings, and then Kapil will be adding to some of the discussion, and we'll be taking questions all the way through. So if you've got a question on a particular slide, just fire away and we'll pick it up after we've talked about the contents of each slide. So I'm going to get going, and where do we start? So the survey, basically just under 60% of the people who took part were active in the crypto space now, or have been in the past. What we know is around the world, we have something like 350 million individual users, tens of thousands of corporates now getting involved, with the likes of MasterCard in the US now offering corporates the ability and banks the ability to accept crypto, to issue crypto, and to hold it on behalf of their customers. And that should see a very big drive in terms of merchants taking it up and individuals doing that in the coming year. So let's dive in first to the individual perspective. So we asked people what they were there for. And right now, most people who responded, something just under 35%, and they were allowed to choose more than one option, said they were there for capital gains, that they'd been there for a good chunk, nearly 30% had been there for 5 years. Some people didn't really know why they were going to get involved in the sector. Some have been there nearly 3 years. The others actually were largely saying the same thing, but it was interesting to show how many people there. And so if you look at this in total, most of the people have been active for at least a year in the space, whilst you've got some who are hoping to get involved and some who are saying, actually, they won't go near it. So it's kind of interesting to just see the spectrum of people who are getting involved in the space. Let's just check there are any questions at the moment. Right. Bill, did you want to add anything on why you see people getting involved in the space right now, or what kind of involvement they're having, whether it's in crypto or in NFTs and related assets?
Yeah, I think what I have seen over the last year, especially, is the amount of the market cap. If you look at where the market cap was for the entire crypto industry at the end of 2020 to where it is now, so it was, I think, less than 1 trillion, if I'm correct, towards the end of 2020, before decentralized finance came in. The overall market cap was about 600 billion. And within sort of a span of 1 year, so we've touched, I think we are at 2 trillion at the moment, but at one point we were at 2.5 trillion. So it's like within a span of 1 year, we've seen 4x growth in market cap. And part of it is, I think, the extra money that is coming in, especially with the new projects, the number of projects that have been coming in, and also the decentralized finance piece, which allows people to get, instead of keeping your money in your bank, you're getting sort of, anywhere between 8 to 20% or even more, way more, if you take more risk from crypto, just from your stable coins. So I think that that has something to do with it. And I think more recently, we're seeing a lot more mainstream coverage, latest one, Coinbase, having that QR code at Super Bowl, that was like $16 million they paid for that 30-second ad. Then, ads in the mainstream, if you go on your social media feed, you can literally just see so much more about crypto. So I think if you look at the bell curve of adoption, I think we're moving from this innovator or early stage to say early sort of, adoption, complete adoption. So those are, I see some of the main factors. I'm surprised that so many people from in the questionnaire have been invested for over 5 years, which kind of maybe tells what kind of readership you have.
Yeah, that's an important point, that an awful lot of the people who follow us and the people who took part are early adopters of most technologies. They're future thinkers, they're innovators. So I guess there's a natural tendency here. And something I forgot to say was that we had over 250 respondents to this. When we publish the report, we'll share the total number of responses per question as well. But today I just wanted to give you a flavor. And to your point, yeah, I think at one time during the last year, I think it was in May last year, the total market cap went just over 3 trillion, which is incredible. Right. And I think part of what's driven that as well is the US stimulus package, where individuals were given money, something like $1,200, which they spent. A lot of people were locked down and started to investigate crypto. And what we have seen is some evidence of people transferring their money out of their traditional savings accounts, where they were getting 0.1%, over to crypto, and as you say, to stable coins and other more risky assets, where they could get these crazy level of investments, and some even offering mad numbers like 70,000% APY, but obviously very high risk as well, that the coin itself collapsed. We have a comment in the chat. I'm just going to have a look at it, but just an encouragement again, please do ask questions as we go along, so that we've got there. How many answered the survey? There you go, 250. And that was from one of our colleagues in Iceland. So let's jump on and look at the next question. The next thing we looked at is why do we see the main reason why people have been jumping in? And the most interesting one was that nearly 70% said they wanted to be part of this revolution where we're democratizing finance and we're disrupting the existing system. And certainly when we look at the launch of Bitcoin, the white papers and the dialogue around it was all about inclusivity, giving access to people, breaking the control of the traditional financial system that caused the kind of volatility that led to the great financial crash, 2007, 2008, 2009. And a real sense that this was different, that whereas traditionally, well, even today, if you want to buy a fraction of an Amazon share, it's very, very difficult to do that. You have to pay the full price of $3,000+. Whereas if I want to buy a fraction of a cryptocurrency with my $5, I can do that. I can buy Bitcoin down to 1 quintillionth, which is 18 decimal places. So there was this idea that we could start to change people's economic prospects by allowing them to come in and gain access to capital growth. And as you'll see a little bit later, that's certainly one of the drivers with what El Salvador has been doing and what a number of other countries are looking at doing. There's also, again, and again, it's probably a reflection of who follows us and who took part. This desire to be part of this new wave of innovation, whether it was as a developer creating these propositions or as a participant in the space. And then also a lot of people recognizing that despite the volatility, or even because of the volatility, there was potential for a much higher capital gain than with traditional investments like equities. And then over time, what we've seen is Bitcoin moving into the realm of being considered digital gold. You certainly wouldn't use it to do transactions with, like buying a car or a pizza. But now it's the equivalent of digital gold. It's a store of value. And so you can see a range of things that people are going into it for. And certainly in the last year, where we've seen inflation really devaluing our fiat currencies by 3 to 8%, depending on where you are in the world, a lot of people see digital currencies as a hedge, particularly stable coins. There's a question here. So let me just take that question or chat comment. If you can, there you go. Yeah, please put your questions in there. So I don't know if there's any questions there. anything you want to add there, Cap, about the this revolution that we're seeing and why there's a kind of almost a groundswell of desire for change, and this is being seen as a vehicle for it?
You know, personally, I think there's a place where a lot of people are just fed up of the current structures and powers to be. I think my sense is a lot of the idea of revolution is kind of coming from that. I don't know how much of the, people spending time in lockdown over the last couple of years have fueled that as well on top of it. And now we're seeing this conversation, just globally about Russia and Ukraine and the West and how that's been playing out. I was just talking to someone today, and this is my personal opinion more than anyone else. It's just like, I just see a lot of drama right now, and so there's a way that I think we're potentially seeing a shift, a long-term shift of the structures, the power, not just the power structures in terms of political power structures, but just generally society moving to a different kind of system. And the way I see it is these kind of changes often take a generation to come in. And, sometimes in terms of timing, I just remember in the 90s when we were talking about internet and what's now Web 2.0, there was a lot of like, oh no, where is this going to go? And 20 years later, like, we can't live without it. And internet and devices and Web 2.0 is just like, it's so embedded in our life. And so that has me also think, right, in our lifetimes, we only really see 2 or 3 these big changes in society. And my sense is that we are on the precipice. We are in amongst that kind of step change right now that will, define the next 10 to 20 years of how this will seep into our society.
It is fascinating to try and see how these developments all come together. So whether it's crypto or artificial intelligence, 5G, 6G networks, cloud, quantum computing, all starting to come together and coalesce in many ways to create previously unimaginable change. And one of the things that struck me from the survey was that on the one hand, we're hearing a lot of noise about crypto being used to finance illegal activities, to launder money, to basically hide people's wealth from the financial authorities and avoid taxation. But when you had people looking at this and answering the survey, they came out relatively low in terms of why people were doing it. And I guess you wouldn't own up to some of these things, but also what the perception was of why people were getting involved. And I think in the early days, there may well have been more of that, but now there is a higher level of traceability because most people come in via an exchange. So we do sort of know who the people are involved in transactions at the end of the day. We got another question here, so let's take that as we go. This is from anonymous attendee. So people who answered the survey admitted to buying crypto to finance illegal activity. Well, we just kind of answered that. I'm guessing that most people, and we never know what the motivations are of anyone answering and to what extent they're telling the truth or not. We don't have that lie detector test as part of it. But I'm guessing that most people are interpreting the question in terms of what they thought others were doing and the dialogues they're seeing if they're involved in social media channels on Telegram, Discord, and others. And that's what I think people are talking about. So let's stride on and look at the next question we're going to share. So the next thing was about, well, what are the barriers? Why are people staying away? And the first one is, and as you can see, a very high number of people saying that for them, a clear barrier, over 70%, was the volatility of the market. And we know the estimate is that crypto is about 8 times more volatile than traditional equity markets. Another is that for a lot of the crypto tokens, particularly where you're staking your money, effectively investing it for higher rates of return, there's quite often a very complex economic model that sits behind it, the so-called tokenomics. And so over 60% felt that that was a barrier, that they didn't want to have to read the white paper that goes with most crypto tokens or most crypto assets. They didn't want to read that in order to understand how it worked, what the risks were, and how the rewards were generated. Another concern is that we're now seeing more and more big players owning the majority of the marketplace. So whether that's the whales who could have been crypto miners who just accumulated a lot of currency because they were mining and getting paid very high amounts of Bitcoin in the early days, and therefore have amassed a lot of wealth, or people who traded early and saw incredible gains if they bought their Bitcoin at $10, $20 and sold it 30, 40, 50, $60,000, then they made a lot of money. And now we're seeing more wealthy investors come into the market, financial institutions. We're seeing the likes of Tesla with a $2 billion holding, and MicroStrategies with beyond that in their holdings. So those players are effectively becoming the whales, and they've got so much power that they can manipulate the market. And there's been some belief that that's what's been driving the volatility in the last 7 or 8 months. Another issue that's come up, and a lot of people cited this, was that the user interfaces to most crypto currencies and exchanges are still quite clunky. They're not as user-friendly as they could be. You have to do a lot of learning in many cases before you can go in and make a purchase or trade a currency for another. And then there are those concerns about crypto being unregulated, and then the sort of two fraudulent type activities where you have a pump and dump where people drive the price up and then sell their holding very quickly and then the price falls, or what are the so-called rug pulls, where the developers announce the project, they raise a bunch of crypto in order to finance the project, and then they run away with the money. So there are a number of very legitimate concerns there that are driving people to be very hesitant about their engagement. So we've got a question here. So let's take, oh no, it's been dealt with. So I don't know if there's any questions there, or anyone got a comment about what the barriers are and what you see as your own barriers to getting involved, or the barriers that people around you are raising for getting active in the crypto space.
Yeah, a couple of things I have noticed, things that are not listed here. One is, I think, education. And a level of handholding because of the complexity of the tokenomics and not very good interfaces, and just 10,000 different plus different cryptocurrencies. I think there isn't very simple educational material that I have come across that a mainstream person can like understand and learn how to go from A to Z. And I think the other big barrier I see is what we see in mainstream media. There's a lot of like fear mongering, some rightly so, but I think mostly it's the risks that get highlighted in the media. So we are usually seeing what's bad with crypto. That's everywhere. So people who have spoken to who are not invested in this crypto market, it quite a lot of the time it comes down to like the fear aspect. It's like, oh, I'm going to lose all of the savings that I have, and which might happen. So, those are, I think, a couple of things that I've seen in addition to what's listed here.
Yeah, and another factor that I would add to that is people's concerns about the environmental footprint and the energy consumption. So Bitcoin, as the first cryptocurrency, had an approach for validation of transactions, which required a lot of miners to compete to solve a complex mathematical problem. And whoever won was then awarded the right to validate and record the transaction on the blockchain. and then got a reward of a certain number of cryptos. Right now it's 6.25. That'll halve in a few years' time to half of that, and then every 4 years it will keep halving. And the concern was that there's a huge energy demand from all those miners, and it's been estimated by a unit at Cambridge that crypto, or Bitcoin in particular, uses more energy than Malaysia or Canada, Malaysia or Sweden. But now what you're seeing is some innovations there. A lot of the miners say, well, we're using waste energy. We're using the energy that's generated and will go to waste otherwise because it can't be stored, or we're moving to renewable energy sources. And then a lot of the new players coming in since Bitcoin have really gone for much more energy efficient protocols, different ways of validating. And so you've got very energy efficient models like Cardano and others. And then you're starting to see some very interesting developments where you're seeing very eco-friendly projects. So there's one called Solarcoin that basically rewards energy generators with a coin for every megawatt hour of energy they generate using solar power. And there's another one that rewards people for pursuing environmentally sound practices. So whether for things like, for example, only using sustainably grown coffee, managing their water consumption better, choosing the right energy providers and things. So we are seeing the other side of that, where cryptos are being used as well to incentivize more environmentally friendly practices. Let's move on and look at the next slide then. So then moving on to look at the corporate side of things. We asked why people might get involved in crypto from the corporate perspective. And the most popular one was, well, we want our customers to be able to buy in whatever currency they want. And we've certainly seen this in the hotel sector and with websites that are basically travel agents for aviation, and even sites like Expedia, who are just saying, look, why wouldn't we let our customers pay with crypto? We let them pay with dollars, with yen, with euros, so that we'll treat it just like any other currency, and we'll convert it immediately to the underlying fiat currency that we do our operating in. More and more, and this was particularly new ventures were saying, actually, we'll hold some of the money we've raised, or the crypto tokens we sold, the value of those, we'll hold them on our balance sheet. And we're also seeing a number of other, if you like, mainstream businesses saying we're going to hold, or we are holding, something between 1% and 4% of our balance sheet cash holdings in crypto. And then others are saying, well, actually, this allows us to innovate around payment models. And unsurprisingly, a lot of people are saying, yeah, we're thinking of getting involved, but we're not sure yet. We don't know why we would get involved. And then others are saying, actually, crypto is a great way for us to invest in our suppliers, to monetize our content. We've got a whole range of images, or we create collectibles. In the physical world, we can put digital certificates for those into NFTs, or we can create an NFT version of that. So a range of different reasons why people are saying we might get involved in crypto right now. And then, what we see is something like 10% actually saying we're not going to go there at all. Any thoughts on this?
Yeah, I was just thinking about, I think for me, new business models is probably the most exciting part of it. Some of the things that we've seen, let's say in insurance, for example, where, the community, people who are invested in that sort of taking insurance out, they're also kind of getting paid for holding the tokens. So there's some really innovative ways in which old financial instruments are being rethought using the blockchain, so that the stakeholders can be part of the organization, either in terms of the DAO aspect of it, or like just paying premium as a cost, as opposed to paying premium and holding tokens, where as the market cap or the value of the project goes up, I'm actually, as a customer, getting some returns from it. So, some of those things that are coming out, or what we've seen in, art, music that we talked about in the last presentation about, how NFTs are being used in lots of creative and content generation. So I came across a project called mirror.xyz, or XYZ in the UK. I go between UK and US in that way. So where you can create your blog, and while you're creating your blog, you can convert your content into NFTs. Then you can auction those NFTs. You can also create a community using the DAO infrastructure. And you can also raise funds like GoFundMe or Kickstarter. And that is all in one platform, and it's all decentralized. So some of these business models that we're seeing, where we're not just decentralizing the existing businesses, but also combining different aspects from different places and innovating them. That for me is probably the most exciting part.
You've mentioned DAOs, decentralized autonomous organizations, a couple of times there. Do you want to just say a little bit more about what a DAO is and how it's being used in crypto ventures, how it could be used beyond that?
Right. So decentralized autonomous organizations is essentially where the community runs either the whole project or a part of the project, and the project or the business essentially goes in the direction where the community wants it to go. And there are different ways in which you can implement the voting mechanism. Community can raise requests for comments, or you can put in requests for change in the direction of the thing, and if the voting based on either the number of tokens you hold or the value you hold, there's different ways you can create the voting mechanism. Then it's really democratic in that way, in that there is no central team. I mean, you can even appoint the central team and remove them based on the voting mechanism, and it's very quick. But it doesn't have the red tape or the bureaucracy that comes with having centralized teams in any kind of business. So you can say there's good and bad. I think we're still in a very early stage of how a DAO system would work best, because so far in a lot of the projects that where I've seen, especially when it comes to financial projects and the DAO, I've seen sort of short-term gains and greed has destroyed a lot of the projects, because people are not interested in the long-term vision. Sometimes they're only interested in how quickly I can 10x my money. And that may not be necessarily in the right frame in terms of what's needed for the project. Does that make sense?
Yeah, no, that's a great overview. And I think that thing of some failing because of short-term greed is a good example of these things being so early stage that the kinks are still being worked out, and we'll see next generation after that models of DAOs that maybe change that put constraints in about when you can sell, and if you're a voter, if you have a governance token, when you're allowed to sell. But some of the things I like about DAOs are, firstly, that in a sense the governance is so transparent. The rules of how the venture operates are not written on paper and potentially changeable by management when they feel like it. They're in the code, and the system is answerable to its own code.
Yeah.
The community has to vote for that. And you could see that being scaled in all sorts of ways to local, regional decision-making, even national decision-making on a bunch of issues, where not only do we get to vote on what government gives us the right to vote on, so the occasional census or the occasional poll on something, but maybe on a regular basis, the community puts forward things which then get voted on by people. So at the moment we have these platforms where if 100,000 or so more people in the UK say they want to talk about an issue, it gets raised somewhere in a committee in government maybe, but it doesn't necessarily get the kind of airtime we'd want, whereas we could control the agenda a lot more, and we could prevent governments from slipping through things that often happen that none of us are happy with. So I think there's some real power in that. We have another question, or it might be a question, from Carl Fredrickson. How does this development fit with the tax system within a given country? What's the policy towards of equal welfare? So, shall I go first on that, Kapil? Or?
Yeah.
So, two things. One is that there's the desire on one hand to be inclusive, but on the other, the crypto community isn't necessarily setting up initiatives to reach out to every community around the world. There are local initiatives, but there's certainly the model there now, and El Salvador is probably the best model, where they have adopted crypto as legal tender since September the 7th last year. They gave everybody $30 in Bitcoin, and the president has been on TV a number of times showing people how to use the official wallet, to download it, how to access their Bitcoin within it, how to buy and sell with it. And for merchants of a certain size, they all now have to accept crypto. So that's the closest I've seen to a kind of societal model. On the tax front, everyone is talking about different models. Country like India is talking about a straight 30% tax on crypto transactions. My view is that the risk is we create very complex systems for taxation, to have people report all their transactions and their profits and their losses. And many countries have this view that every activity is a taxable activity, whether you make a loss or not. But that's going to take a while to implement. It's going to be very expensive. There'll be a lot of developers involved. You can imagine that external parties, lawyers, accountants, everyone getting involved and being replicated all around the world, costing billions and billions of dollars. Another way of doing it would simply be to say that at source, every time a transaction happened, there's a certain fee paid. And there's already fees on every transaction, but that's a tax. So whether you're buying or selling, there's an automated tax collection in the same way as we have sales tax. And we don't know who's paid that sales tax, but we have a lot less people to collect from, whether it's the crypto exchanges or the individual ventures that we're buying and selling through. We're dealing with a lot less players. It's around 10,000 today. And it's a much simpler mechanism, and you could use that globally, and it would take a fraction of the time to develop, because you'd use some of the smartest players in crypto to create this and make sure it was secure. But that's too simple, too easy. And I don't think we'll go there, unfortunately. We'll go for something much more complicated. Let's move on to the next question. So we then looked at what will people's approach be to investing. And it's interesting that by far the biggest number of people said, we just don't know yet. It's too early for us to know. And that's kind of reflective, if you like, of the fact that only about 350 million people out of a global population of over 8 billion are active in crypto. And then the next group are saying, well, actually, we haven't even looked at this yet, and we don't really have plans to go there. And then the next group are the ones who say, well, actually, we've got some crypto. And quite often those are crypto ventures themselves, but a growing number of small enterprises in particular who are willing to take a risk. So maybe every time they do a transaction, they're saying, well, we'll take 1, 2, 3% of that and put it onto our balance sheet as a crypto holding, as a long-term holding, rather than having it in overnight cash where we make almost nothing in terms of the interest on it. And then the next group are investigating it, and some are saying they'll do the increase in over time. So a variety of different reasons, and then obviously there are people who have looked at it, and right now they're saying no, we're just not going to go there. And it's understandable that because of all the reasons we talked about earlier, and that noise and fear and uncertainty and doubt that Kapil mentioned earlier, it's inevitable that there are going to be a lot of people who will wait till it really feels like there's a lot less risk. and maybe they'll only buy through their bank or some other financial intermediary who they hope is taking the risk out for them, and the complexity of buying and making it as easy as putting money into a savings account or buying shares.
Yeah, I would also say that I think this year, or in coming sort of 12 to 24 months, we might see a lot of change in this. If we were to take the survey in 12 months' time, I think as the more and more countries are now talking about regulation, talking about taxation, some of the uncertainty will start to disappear. And I think that will be a good time for people to then say, okay, well, how do we make use of this opportunity? Is kind of my sense.
And the education piece is critical there, because if people don't understand inside the organization,
right,
it's very hard to say, well, let's get involved if people don't know how to be responsible for the crypto. And there's all sorts of things like, where do we hold our crypto to make it sure it's secure? How do we deal with all the issues around passwords and all those kinds of things that most of us have if we're dealing with crypto? You don't want one person to be holding that. So finding the right corporate mechanisms to do this is leading to companies saying, well, let's just hold on for a bit until it's simpler. And it may well be that insurance companies step in to play that role, because it is effectively an insurance mechanism.
Right.
Then when we asked about, well, what are the barriers to getting involved? The first was clearly almost 50% saying, look, this is an unregulated space, and we're not sure where the regulators are going to go. So maybe we'll just wait until we've got more regulatory clarity. Others, inevitably, as with any new technology, will start by saying, well, I don't see the benefits. And I guess I've been around long enough to hear people saying, well, I don't get why we'd use a fax machine when we can use the telephone or send a letter. I don't know why we would use electronic data interchange or text messages or emails when we've got a fax. And then I don't know why we would use the internet when we've got EDI and text messages and email. And why would I then go to social media? And now the same thing is happening again, where people are saying, well, why would I go to this? What's the benefit of adding a payment layer to the internet? And what can I do here that I couldn't do with centralized systems? So there's all of that conversation is there. And then I touched on this. People not understanding is a massive barrier to all sorts of technology adoption. And if you look at the reasons cited by many of the studies on why big digital transformation projects fail, or even smaller technology innovation projects, it's often because of a lack of understanding at the senior level of what the technology can do and how best to organize to take advantage of it, but then also a lack of understanding at the operating level of how to use the technology and how it can change the way we do business, rather than making the technology reflect the way we used to do business.
Yeah, and I wonder how much of this survey is because depending on what kind of businesses answered the questions. Because if you are in, say, financial sector or any kind of social media content, art related sector, I think we're seeing massive changes in those sectors. Like as soon as there's some kind of clarity in regulation, just as a consumer, if I'm getting 0.1% return on my savings in a bank, and I'm able to, without much risk, get 20-25% on stable coins, I know where I'm going. And I think those kind of things, as soon as there's some regulatory environment in decentralized finance or crypto market, for example, that risk of losing that money goes away. And as soon as that goes away, I think we will see a lot of force change in some of these sectors. From a technology point of view, I think we're already seeing a lot of change.
Yeah, and you talked about the no-brainer of moving your money into some of these assets. And we have seen growing concerns from major financial institutions that are, on the one hand, they're putting more money into crypto and they're encouraging their customers in and setting up funds and setting up exchange traded funds. On the other hand, they're worried that money will move out of savings accounts, but also that the bond market will get affected, and that people will say, actually, rather than buying bonds, I'll put that money into a stable coin earning a much higher rate of interest, or a slightly more volatile coin offering an even higher rate of interest. And if you're starting to look at things that aren't AAA rated, what's the equivalent? How do the risks compare of the two? Would I buy this country's debt when they're rated at BBB, or would I put it into something that feels much more secure as a stable coin that offers me a higher rate of return? The next area we looked at is blockchain itself. So blockchain being the underlying technology for Bitcoin. We went through some different phases. We went through people at the start saying, well, I don't really get what Bitcoin and cryptos will give me, but I see that blockchain could have some value. And then there was a lot of companies and organizations tried to build blockchain applications. Most weren't that successful because they took away a lot of the things that you want from a blockchain, which is it's immutable, it's append only, it's transparent, and it's distributed. And they started to try and do things that took away many of those features so they could make them proprietary and closed network. And so there was a rejection of that, and not many really secured the benefits. Now we're seeing a new wave where something like 10% of banks are now using blockchains on a regular basis for different applications. So we are seeing that change, and we are seeing people say that either they're using blockchain to move centralized applications across, or they plan to. And then the next thing is, well, we can create things using decentralized blockchains that we just can't create today. And we can open up new ways of doing business, bring new partners in. A lot still don't understand it, which is why you have this level of don't know, if you like, nearly over a quarter saying that. And then others are saying, well, actually, it's a good way of us tracking things through the supply chain, having a decentralized mechanism. Things like food, well, we know 40% of the fresh food in the world gets wasted. A lot of that is in the supply chain, and it's not always clear where the slippage is, where the losses are. So starting to track that with blockchains start to give us much greater control, much greater visibility over where things are happening in our supply chains.
I don't have anything to add to that.
Okay. Well, one other one I wanted to just pick up on is we're also starting to see innovators coming along and say, we can give you suites of tools that you can access in a decentralized manner that will allow you to do bigger things on a software as a service basis. So, for example, tools to develop a range of AI applications where you can plug together different modules. And I guess the leaders in making that happen is a blockchain venture called SingularityNet, where they're real pioneers in the field, and they're pulling together more and more applications into their environment, into their ecosystem, to make it possible for companies to build things without having to rely on going to the big tech companies to use their platforms instead. And then we moved on to ask questions about CBDC. So we're seeing more countries looking at going down here, doing trials. China's had its digital yuan trial, lots of other countries, Ghana and others, moving in. And we saw a number of reasons why people thought we would do that. The highest was get away from physical money and all the transaction costs and the risks. If we move it to digital, we can really simplify and streamline the way things happen, make the payment mechanisms more transparent, more stable, get them the transactions settled faster. There's a question today of why, when I send money from one bank to another, it can still take 5 days when it's almost instantaneous. And also to cut the kind of payment processing costs that we know that exist with banks, with credit card companies, and with things like paying money, spending money in a foreign currency, that we've known that for a long time, whoever we hold our money with or do the transaction through have been, milking us with very high transaction fees. Some of the new players coming through are saying, well, actually, there's zero cost really. This is all electronic. So a CBDC would help do that and bring those costs down. And other things like reducing tax avoidance. What we saw was very high support for a number of these benefits. And this idea of getting to digital inclusion because you won't need a bank account. There is a concern, obviously, around things like governments influencing us and trying to nudge our behaviors and knowing everything we're doing, and also about the intrusion on our privacy. So we do know there are a number of concerns as well, but the benefits are sort of seen to be more important right now than the possible risks of a CBDC.
Yeah, I think for me, I agree with all of that. For me, especially the privacy intrusion and eliminating cash has been one of the things that's been talked about for ages, right? It's like when contactless came in, that was the whole idea of like removing cash from the system. With contactless, it was about, you know, fraud, and I think up to, so I don't carry cash as an example, but just the idea, I think there's an ideology thing here of like, I can still hold some cash if I want to, and especially, you know, in the sort of, I don't know, like there's a psychological thing almost, you know, with freedom and privacy that exists. I think that will play a big role in CBDC is how I see it. Some of the things that we're seeing, the news coming out of China, for example, with the digital yuan and how governments profiling customers and as it says, nudging citizen behavior, you know, scoring people on who's a good citizen and who's not a good citizen. That I just personally, I find it's a step too far. And those kind of, I think, things stay with me, and I think other people will be thinking about that too.
Absolutely, yeah. So let's look at the final couple of questions that we explored. The next thing we wanted to look at is this shift to using cryptocurrencies as legal tender. And we know that on the September the 7th, as I mentioned, El Salvador started to accept Bitcoin. And other countries are looking at that. Russia's just announced that it's going to accept some cryptos as legal tender. And right now, there's a lot of doubt as to, well, why would you do that? What are the benefits of that? And we've seen the IMF warn El Salvador about doing that. And there's different views about why the IMF are doing that. And some people are saying they just don't understand it enough, so they're trying to slow it all down. And there's a concern from a lot of businesses that this could just make it more complex. It could impact the way we do business, the operational processing costs. It could start to impact on our revenues and our profitability. And it can make things like internal transfer pricing more complicated. Others are saying, well, actually, we'll just accept that where countries have made crypto legal, we'll have to accept it, and we'll accept it. We may even trade in it and price in it where that we're talking about legal and reputable currencies. And then some are saying that they'll go beyond that and really trade in it more globally with a range of cryptos that, again, considered legal and transparent. And then there's also concerns about whether we would go there at all. There's just too much risk, and we would just not go there, and we'd basically say, well, we'll stay out of that part of the marketplace. And we'll see how long that strategy survives in the face of market shifts. We're right at the early stages of this. 2, 3, 5 years down the road, depending on the level of adoption, we might see companies changing their mindset around this.
Yeah, I agree. And I think a lot of what we're seeing in the last few weeks, you know, the news coming out of India, the news coming out of Russia, even some of the US states like Arizona, you know, and Miami has a Miami coin, New York talking about having something similar. So I think there's a range of things that are happening that'll define how this question will get answered, I suppose. I don't know if the impact, we probably won't have much say in what impact it'll have on individuals and also to a large part on businesses, I think.
Right. Which kind of leads us to the last question we're going to look at, which is, what are the potential economic impacts for the countries themselves? And this was interesting, that there's a very strong view that it would reduce countries' dependency on other nations where they're very closely tied. So El Salvador is a very good example. A number of other Central and Latin American countries are really tied very closely to the dollar, or it is their currency, or it's accepted as a currency, which means they're largely the recipients of the economic and financial policy of those nations, and their fortunes are very tied to the value of the dollar. So something like this starts to reduce dependency. Again, this idea of increasing financial inclusion, which is the example from El Salvador. And then with a lot of poorer countries, what we know is that they have a large diaspora of people who've left the country to work abroad, but they still make cross-border remittances back home. And again, they can be charged up to 12% by some of the money transfer companies. And we already saw those transaction costs coming down just via the internet. But what cryptos do is bring that down even further to really minimal transaction costs, which could really dramatically increase the value of those cross-border payments. And others say that, well, yes, there's an increased risk. If the crypto collapses, that could cause a meltdown in the economy. But then again, others are saying, well, but there's a positive benefit here, that if we're trading in crypto and people around the world are holding crypto, it makes it easier for them to invest, to visit our country. They don't have to exchange the currency into another currency to trade here. They don't have to pay the kind of credit card fees they have if they visit the US and their base country is France, and there's a charge from the credit card company to convert back to euros. So that there's a variety of kind of perceived benefits here. And that idea that, just picking another couple out, that on the one hand, we could reduce that political dependency on other nations, but also we reduce that risk of when a currency deflates, it creates potentially very high levels of inflation. With the price of cryptos largely being global, there's less chance of them, a currency falling in one country, the price everywhere drops. So there's less risk of that kind of domestic inflation if everything is priced in that crypto.
Nothing to add.
Okay, well, that's kind of pretty much everything that we wanted to share today. I hope this has been of interest, and we will be publishing the report in March with the full set of questions and answers, and also the analysis of some of the free text comments, which are very interesting. We didn't have a chance or time to go through everything tonight. We have got some more webinars coming up. You'll see these here. We'll also write to you after the event today, giving you the video link for what we shared today and giving you the links for these events that are coming up. And finally, if you're interested in our survey work, we have a really fun survey going on at the moment looking at artificial general intelligence, that idea of creating AI that's as smart as humans in many, many domains, rather than the artificial narrow intelligence we have today. And it's exploring all sorts of implications and potential benefits of doing this and potential downsides. And we've had some fascinating responses around the world, and a lot of people saying the survey itself has been educational and just helping them think about AGI and what it could do and where it could have an impact. So, if you want to take part in that, just take a picture of the screen and you can see the survey link there. But it just goes for me to thank you for attending and for listening to us and for your questions, to thank Kapil for his very insightful comments all the way through, and to say we hope to see you at future events. Thank you very much.
Thank you. Thanks, Rohit.